Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Monday, the 12th day of May 2014, and this is the daily report for gold and silver. We do have the precious metals under moderately higher pricing today. Gold currently trading up about $6 on the day, $12.95.84 is the current print. Low according to Kitco, $12.87.30. High 13.05.10. Silver also trading higher this morning, actually up about 37 cents on the day. Current print is 19.52, the low 19.09, the high 19.74. Will it close above 58? That's the number we're looking for before we consider entering into the market. More on silver towards the end of the show. Traders, as you can see, currently trading at $12.95. Now, in yesterday's trading activity, we did come down and we hit a low at around 78, I believe. 78 is the tick that we're seeing here. We are looking at the fact that we had our stop below 83, and the question is where below 83. I want to kind of clarify the way that I use my vernacular, so to speak. When I say just under, I'm talking about a couple dollars, $1, $2, $3. When I'm talking about under, we want to put it in a place that's going to protect us from any of these aberrations, so to speak, these lows or the highs if we're short that come into the market. I talked with 4 of our subscribers this morning. All of them are still in the markets and in the markets on the long side. We're marking ourselves in. Our stop is still below 83, but when I say below 83, I'm talking about giving it some distance, seeing these lows right here at about 78. And we talked about the fact that we wanted to protect ourselves if it made a new low below this area. And as you can see, quite easily, the market has been really tracking above it except for a couple of ticks. Now, what I am noticing in the market, and we talked about this a little bit on Friday, is the fact that when we draw a upper level resistance line from these series of highs here and here, and then if we take a look at the lows that came in the market, and I usually try to keep these lows and the highs, I try to put them within the body typically, because that's really our real range. The one thing that we can see no matter how we draw this is that we are coming closer and closer to the apex of this compression triangle. Now, does that mean that we'll see the market actually take off and move from that point? The theory behind it, at least in theory, is that we should see some sort of release of pressure, and so we should see either a spike or a drawdown, but we should see a dramatic move in the market once it reaches that apex. Now, one thing is clear. We are going back to the upper range of this, call it narrow range market right in here, and my sense is that we want to see how it reacts. Of course, we talked about different resistance points should the market continue to track higher. I believe 1312 is one, and of course 1333, that is our secondary point that we want to see how it reacts if the market continues to rise. My sense is, as I pointed out just a few minutes ago, is the fact that we've had these series of lower highs in here. The last couple of lows have been higher lows, and that's what really gives you that compression triangle, is when you get lower highs and higher lows, you're getting a narrowing of the range. And so as we approach this apex, and this apex is going to come towards either the middle of this month or towards the end of this month, we're in the middle of the month, towards the end of the month, up till maybe June. You can see where June starts. So by June, I would think that this market has reached the apex. A lot of people are believing that the market is bottoming out in this area. I'm of that same belief, and under that basic assumption, we could see the market spike and spike dramatically to the upside, and that's what I've been looking for. We'll have to see if that bears any fruit. As of yet, it has not, but we'll have to see how that unfolds. So traders, we are looking at a 480-minute chart. We're analyzing, again, the same compression triangle, only from a different angle. And when we do it in this way, what we're seeing right now is that we are back at the top of this range. You can see we fixed it on this point and really on this point here. And we're at the top of the range of market. This is that high that it hit, 1305, I believe. came back down. But the key to me right now is we are very, very close to coming to some sort of an apex. We'll have to see, is it just going to meander? Will it fizzle out, or will we see the release of pressure that we can see when the market has this kind of composition? So traders, we're looking at our 2-day chart. More importantly, this is the chart that we have used with our Ender's Pitchfork, our handle, of course. What we have been following is the 0 prong, most importantly, and then the 100 here. We made note of the fact that for the first time since we've created this chart, we were actually looking at a scenario in which the market actually did track above that. It's very, very clear. We do have a high above that, but that was very short-lived. Comes back and then really finds really solid support at this 23% prong right here. And so when we do that, you can see finds support, drifts up off of it, midway through, comes down, and has been tracking sideways. So what's interesting is if it's tracking sideways and we have this real compression triangle and we get a break, if that break comes at the same point that it breaks through these cascading channels, then that to me speaks spades in terms of strength or possibility of a really strong rally in the market. As I said, we'll obviously have to see. When we look at the Japanese average, we're not getting any kind of indication that we are in any way in a rally type mode. Let's go ahead and put that up. But what we are seeing, and this is today's candle, is this doji candle once again. So again, these dojis can be significant or they can lack any kind of really clarity or meaning in the market. But what I can say is that there are occasions when they are extremely, extremely strong in giving us a potential pivot point or turning point in the market. You'll typically get some sort of a small-bodied candle somewhere along the bottom or top as that market's turning. Now, you don't get that right here. You certainly get that right here. You can see this beautiful pivot point here. You can see a pivot point here. And the market has been sideways, though. And even in sideways action, we are getting some sort of indication. Now, what you are noticing is this increased volatility. And we spoke about this volatility and talked about the fact that when you have markets that are trading off of geopolitical news and economic news, as the scenarios change, and we're talking in this case about the dilemma or crisis over in the Ukraine between Russia and the Ukraine, the vote referendum that just came in today, whether or not it's legitimate, troops on the border, are there troops on the border? Putin says he's removed them. At the same time, we're showing proof that they're still there. There is absolutely the opportunity for increased volatility, and we want to keep that in mind whenever we make any kind of play in the market. But I can say this: as this market's come down, we have seen where there's been support. We've talked about that support, 75, 70 in that area, 80. That area's got really, really strong support. We're also seeing very strong resistance right now at real strong, of course, at 33. And then we're seeing it right now at 12. And that's right in this area here and then below, because this is 1320. 1300 here, so 1310, 1312 would be right here. So we have some resistance in here. So we've got these different bands of resistance between, say, 12 and 18 on the top side. On the low side, the bodies are showing us different points of support. In terms of our bodies, that's sitting around 82, 83. But in terms of the lows, we had that 78. We've had a couple of these extreme lows below even that. But that's not really been telling us what the market's doing. They've just been trying to run stops or bringing the market down superficially, only to find buying come back in the market. Now, we do have uncertainty in terms of the geopolitical scenario. We do have weak demand, though, that was reported in terms of physical buying. So we've got that push-pull relationship going on with gold right now. Now, in terms of silver, we are seeing some signs that, to me, are pointing to a possible move in the market. Last couple of lows, we've had a series of higher lows, excuse me. However, we've had this real strong ceiling right below $20 per ounce, just above 1958. And without the market being able to effectively close above this point, I still believe that sidelined is the best bet on silver. We really need to see it break above this before we can genuinely look at these other areas for it to go to. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.